What's up, guys? It's Rob here, and today I'm going to be sharing a really important message with you, probably letting you in on the biggest mistake that any investor is making out there. A lot of people are doing it right now, and I have been one to do this in the past, all right? So I've spent pretty much this whole morning listening to John Bellion's all-time low because that represents perfectly where the market is at right now. It's not at an all-time low, but it certainly feels that way, right? Day in and day out, when you watch the market drop like this for months, it certainly feels like we're always at an all-time low, at least for your account. It's just dropping and dropping and dropping a lot of the time. Things have not been doing too well, especially these smaller market cap stocks, which retail investors tend to be in. And it's really unfortunate that that leads to people making probably the biggest mistake that they can ever make if they're an investor. Because when you're an investor, you're typically investing so that you can feel better, right? So that you have less stress in your life, so that you have more money and you have less stress because of that. And people who are investing and when the market takes a turn, they make a big mistake. They oftentimes are not just at all-time lows in their portfolio, but they're at all-time lows in the way they feel, right? They feel beaten down. They feel kind of cruddy when they look at their portfolio and it's less than it was the day before. And the market just tends to have that effect on people, right? When they see themselves losing money, when they see themselves losing status because of that, it's a really unfortunate thing because that is the biggest mistake at the end of the day that you can make, right? To actually let the market dictate how you feel, to actually feel worse. I mean, it's one thing to feel better when your stocks are up, but to feel bad when your stocks are down, that's really bad. And there are a couple of ways that I avoid this mistake, or there are a couple of things that I've realized and a couple of things that I've done to help quell this, because I certainly used to be the type who, in my early days of investing, would look at my account and I'd feel great on the days that it was up and cruddy on the days that it was down. And I know that it's something that happens to a lot of people, so I'm going to let you in on my couple of secrets, right? The first main thing that I always keep in mind is that there is a light at the end of the tunnel. And I don't mean that every stock is going to be a winner, right? It's not to say that every stock is going to be a winner no matter what. But overall, if you're in this game for the long term, if you're investing for the long term, then there are two ways that this can end, right? It can either end in total ruin and the entire market could collapse. If you're well diversified, then that's what it would take to really destroy your portfolio. The entire market could collapse permanently. And that would probably mean we were at some kind of end of the world situation, right? That would probably mean that nuclear bombs were going off or something like that to that extent was going on. If the market was to perpetually fall and never recover, right? That's essentially what that would mean. And the other option is eventually, even though there might be bad times for a while, eventually times turn better and the market continues moving up and eventually we get to new all-time highs, right? And there is that light at the end of the tunnel. So depending on what you think, there are two ways that it could go. In my opinion, it's always better to be invested during them just because you're either going to be there for the end of the world with nothing or you'll be in a world that's going to exist with quite a bit, as long as you believe in the markets overall, right? Maybe you could make an argument that the markets won't always exist. Maybe we're going to move into a crypto space and businesses won't need to exist in the future. Maybe you could say that. But while we've got this capitalist system, it tends to be the case that the markets eventually make new all-time highs despite whatever economic hardships we go through. So you've got to keep that in mind, first of all, that there is a light at the end of the tunnel and that these short-term losses that we're experiencing aren't going to dictate the rest of your life, right? You're eventually going to get past that and you're eventually going to get to a much better place. Now, the second thing, and this is also very important, this is a little bit more actionable, is you need to manage your risk, right? You should not be risking more than you can afford to lose. If you're putting money in the markets and risking money that you're going to need in the next month or two, or even in the next couple of months for food or for rent or some other kind of expense, that, in my opinion, big mistake, because then there can be real consequences to what goes on in the market. But if you're just putting in money that you can afford to lose, money that you've worked for, money that you've earned, and that you're willing to watch either grow or shrink based on what's going on at the current time, knowing that over the long term it will most likely grow, then that's just all the better, in my opinion, right? It's never a good idea from my stance to be risking more than you can afford to lose, right? That can often lead to ruin, and that's what ends up making you feel bad when the market goes down for a good reason, right? You should feel bad if you're risking more than you can afford to lose and the market goes down, because then you're actually in some real trouble. But most of the time, you should be enjoying the market, right, guys? You should be enjoying the market. You shouldn't be worried about the short-term fluctuations, even if stocks move down for a year. You shouldn't let that weigh on your mood. You should always be enjoying yourself because we are here investing to feel better, right? We're not investing so that we can feel worse and worse as the market moves down. You don't want to feel worse. You're investing so that you have more money, so that you have more freedom, so that you have more peace of mind. And overall, we're doing that so that we feel better, so that we can enjoy ourselves, not so that we can feel bad when the markets are down, regardless of how things might be going in our real life, right? So that's what I wanted to say to you guys, just to get that out there, let you know that despite the market moving down, you really shouldn't be feeling all that bad as long as you're not risking more than you can afford to lose. So other than that, guys, I hope you have a great day. Keep in mind, none of this is financial advice. I'll see you in the next one. Bye.